This video is how to trade crypto on OKX. I'm going to go through the OKX trading platform and exactly how to use it, and then some more advanced ways to actually analyze crypto prices, when to take risk and when to buy and sell. I'll leave timestamps for all of that down in the description. We'll get straight into the trading system then. If you don't have an account for OKX yet, I'll leave a beginner's guide down below, which tells you how to open an account and get money in and out of the platform. I'll also leave a link to OKX. They do a really good deposit bonus if you are a new user, so you can check the details via the link below. This one's running out, although they basically refresh it every month. So you can check the details via the link down in the description. From right here though, our trading system needs to be set up properly. So if we go to trade once you have an account and then spot, it takes you through to this page. Search for the asset that you want to trade up here in the top left. So you can search via the name of the asset or its ticker if you know that, and you can see. We're going to focus on spot trading, which is buying and holding crypto. So we'll just leave it on Bitcoin for now. In the top right, go to settings. Just make sure that you have some of these settings in the way that you want. So I've got order confirmations on for this tutorial. You can turn them off. That means that when you press buy, your order immediately goes in and you don't get a second confirmation. So you can set that up in the way that you want. Also the layout. This is kind of a standard layout and I'm used to using this, but if you come up here, you can change this around. So if you go to standard, then it basically just moves all of the boxes around for you. It's all the same information, but however you want it laid out is up to you. I'm just going to go over to this one right here as I'm used to this. So for right here, we have our trading system set up. This on the right-hand side is where we input all of our orders. Very clear, you're either a buyer or a seller, and then all of the order types are exactly the same. And then from here, this is actually the price of the asset that we're looking at. So the order book, we have this right here, which is the mid price. That is the price that the asset last traded at. All these guys down here are buyers who are showing their bids for the asset. They're obviously below this price, trying to get asset cheap. And then up here, these are sellers. And these are their offers. And these are above the mid price. And you know, whoever actually comes in and meets and trades, that is the price that's traded, and that's the mid price or the actual price of the asset. From here, we can set up the chart in the way that is appropriate for the time frame that we're trading in. We're all different. Some of us have an investment time horizon of 30 years until retirement. Some people are looking to trade maybe a couple of cycles, which would be 8 to 10 years. Some are looking to trade one cycle, which could be anywhere from 6 to 18 months, depending on when you're actually looking. What do I mean by cycles? Bitcoin has very, very clear cycles, and we can plot these on a long-term chart. And then we can use that in conjunction with a price chart to give us levels to trade, right? Because we want to know when to buy, when to sell, those areas where Bitcoin is relatively cheap and relatively expensive. So we can use both of these types of chart. So what we can do is use the price chart here. Down in the settings, you'll see that there are two options, regular and logarithmic. Regular is the actual price chart. That means the scale on the right-hand side is a normal scale with prices. Logarithmic changes that, and it actually compresses prices as they get higher. Logarithmic charts are used for long-term trends, and so you can see adoption over time. Price charts, of course, show us the actual price as it stands. And they look very, very different. You can see this is the price chart of BTC, but if we go to the logarithmic chart, it looks a little bit different with prices up here compressed. So to set up charts, we can look at both of these because crypto networks have these long-term adoption models, and we can see on these long-term adoption models areas where the price is overextended to the upside, overextended to the downside. That gives us the areas where we can take risk. We can buy and sell. And for that, that's going to give us the areas on here where we can actually very easily put these areas on. This is a buy zone. This is a do nothing zone. Maybe this is a sell zone. So we can use both. On OKX, you can see here I'm on the day chart. I'm using candlesticks, so I recommend that. If you don't know what candlesticks are, I'll leave some videos below. But essentially, each candlestick is a time frame, and Green is up, so the price moved up during that time frame. Red, the price moved down during that time frame. If you're trading on any midterm time horizon, so 6, 18 months, a couple of years, you can use the day and week charts like this. So I've changed to week chart. That means each candlestick is now a week, and that gives me a much stronger feeling of what the price is doing over, a midterm time horizon. So we can see that Bitcoin currently is in a big uptrend because each week, which is one of these candlesticks, seems to be moving up with some consolidation, but general uptrend. So we're clearly in an uptrend here, and that's important. But on this price chart, we don't know if the price is cheap or expensive or anything else, which is why we use this logarithmic chart as well. So this is the Bitcoin price chart, but in a logarithmic chart. And from here, each of these blue lines is a halving. So very clearly with BTC, you get these distinct cycles, and BTC leads all other crypto assets as well. What we can see is that after each halving, we get an expansion up to a price that is an all-time high. You get an expansion, right? And potentially expansion here too. After that, there is a process where the Bitcoin price tops out, and that is the high, and then you get this drawdown. So after the Bitcoin price tops out, you get these drawdowns right here. So this would be a bear market or a drawdown. So we have expansion, drawdown, and then after the drawdown is finished, you get this period of recovery like this. And that happens just before the halving. So these cycles are extremely distinct. And we can see that from this logarithmic chart. Now, this gives us the perfect areas to trade and take risk. Given we assume the asset we're trading is on a long-term uptrend, which Bitcoin has been for 15 years. So we're pretty confident in that. So given that we have these distinct cycles of expansion, contraction, and recovery, we know if we want to take a long position, we want to buy, the best time to buy would be when Bitcoin is drawing down and recovering. Those are the best times to buy because the price is relatively cheap compared to its long-term uptrend. Where do we want to sell, or where do we want to maybe not buy? When Bitcoin is relatively expensive in relation to its uptrend. That is up here at these levels. If you're buying here, then it can't really go much higher because the cycles are very distinct and the price is overextended in relation to its fundamental growth. So you can see these cycles are extremely clear. We have these cycles up and down like this, but the general trend is to the upside. So if the general trend is to the upside, we know that we can take risk when the price is lower. We can wait for the price to overextend to the upside and take profits if we want. That's trading cycles. Or if you're a long-term investor, you simply buy this and just wait because the long-term trend is to the upside. This is drawn on from halving dates from right here, the paintbrush. We can see a curve, so I just draw that on. Draw these on. Upper bound, lower bound, and a midline curve. And then these, the expansion, contraction, and recoveries. If you want to know how to draw this chart, I will leave a link to the Crypto Investor course down below where you can see this chart. I'll show you how it's drawn and I analyze it over time. So long-term charts give us those areas to trade. And back on the price chart, we can plot this as areas to actually buy and sell our crypto. Now let's use our long-term trend analysis to put buy and sell zones on our chart. Areas to take risk and areas to let risk go. This is when risk is cheap, when you're down at the bottom. This is when risk is expensive, when you're up at the top. These zones are very clear. Essentially, anything up to about this level, midway through the upper zone, that would be a buy zone for me, right? So we're going to draw that on the chart. That would be around 75K and below. So go to our price chart, draw a box out here like this, and we're going to draw anything to around 75K. So that for this cycle, that is my buy zone. I'm going to be buying in that zone because the long-term trend analysis shows me that that is when Bitcoin is relatively cheap. When it's getting up here, it's getting a little bit overextended for its phases, right? The current cycle that we're in. Bitcoin goes higher longer term, but in phases, you get either overbought or oversold. So that would be the long-term trend analysis. Up here, this would potentially be a sell zone if you're looking to take profits over a shorter term cycle. So it would go here. And I would say up at the top of this, anything 100 or above, obviously a sell zone. So we draw another chart, let's say around here, right? So we don't know where the price is going to get to or how long it's going to take to get there, but we can draw this in red. So that would be a sell zone. Very, very simple, extremely simple trend analysis. Bitcoin moves in cycles, it has a long-term uptrend. Anywhere down here, risk is cheap, Bitcoin is cheap in relation to its cycles and its trend. Up here, Bitcoin is relatively expensive. Each time it's got up here before in these zones, it has rejected and become a bear market. Extremely simple buy and sell zones for BTC. Now we don't have to worry about the price or the time. We just say, if Bitcoin is down here, it's relatively cheap within its trend. If Bitcoin is up here, that is areas where it is becoming relatively expensive within its trend. So they are very simple buy and sell zones. If you want to get more specific with your trading and try and be a bit more active, we can use support and resistance as well, which I'll show you how to use. Support and resistance, very simply, just gives us price levels where the price has rejected from previously. And those seem to be areas where buyers and sellers come together and have a fight about which one is going to win. These are areas where the price clearly rejects from. And so you can see that right here. So we'll just draw that on. Can you see we have an uptrend and then the price rejects from that uptrend right here. And the price then draws down. Then we get a rejection from this price. The price moves up again. So there's a level here and there's a level here. This area is an important area. Buyers came in, there were way more buyers, pushed the price up. Eventually at this price, sellers came in and forced the price down. Buyers took over again. This area is a clear rejection at this price. And so that is a support and resistance level. The price comes down and rejects to the upside now. That just so happens to be exactly the same price as it rejected again. So now we have two levels that are extremely clear. We have this one here and we have this one here. As we come up, this is an area here, but it's within the zone. So we'll look to the next one. A rejection level here. We have a rejection level here. We have a rejection level here, right? You can see where the price moves and rejects from. Then we obviously have a very clear rejection here as well. So what we do, we can draw a line or a box to show support and resistance. So we'll just click a trend line. And then this is clearly an area of support and resistance, right? It's important to know that wherever we're trading right now, the price we're trading at right now, that is where you should draw your upper and lower support and resistance levels, because that's the one that's actually important because the price is, where we are trading now. So we're trading at 51. So I'm going to go left. You can see the dotted lines put me right on this area. So I'm just going to click here, zoom it across. We are at a resistance level. You can see that here, and we're coming into it again here. That's probably a resistance zone, which is why Bitcoin is just printing a red candle. It's a resistance zone. Now we have to say to the downside, where is a support zone, right? So we can see this is a level, this is a level, a lot of choppy trade around here, right? So that's clearly a level where it's important. And we actually got choppy trade around this price level again. So that's clearly a support and resistance level. So we're going to draw another line around here. So now we have support and resistance. So the price usually trades around this and consolidates around it or has some choppy trade around it. So from this, if you want to get more specific on your trades, what we can say is, well, we're in an uptrend. So maybe we don't mind buying resistance because we're in an uptrend. So you have to break through this resistance to go into the uptrend. But if you want to get a little bit more active, you can say, well, I think, the market is maybe a little bit weak. It's a little bit overextended. What I'm going to do is try and wait for a rejection as we come back down to this support level and try and buy a little bit more Bitcoin right here at this support level. This way, you're trying to get better entries for your buys and your accumulations. Now, if you've really got a long-term time frame, it's kind of irrelevant. But if you are trying to be more active, trying to eke out a few more % of profit, then that can be done. Now, the downside of this is if you get it wrong and the price doesn't reject and it actually breaks through, then you simply haven't got the crypto that you wanted to buy and you're going to have to pay higher prices. So there's pros and cons to all methods. Now we'll look at OKX's auto invest or recurring buy feature. So this is a way to automate your trades in the areas that you want it. So for example, if we're happy to buy in the buy zone, which is a green box, and then we need to finish there, and then potentially we want to sell some in the red box if we're getting up there, if we're a trader, or maybe if you're an investor, you just want to scale back your buys or not buy any if it's really overextended, and then just wait for the next part of the cycle. We can use bots to do this. So if we go to tools and then we want to look at trading bots, from here you can see the bots right here. I'm actually going to look at recurring buy, and what this does is automate the process of buying crypto. So we don't have to actually put orders in all of the time. We can simply tell the bot, hey, I want you to buy each and every week when the price is within this range, and that's it. So the crypto allocation, you can see Bitcoin here, but you can actually search for others. So if you add crypto, you can add other cryptos that you want to buy, and you can add them in any percentage that you want. I'm just going to delete ETH here. So we've got Bitcoin, and I want you to buy every single however long. So if you just want to carry out a daily buy at 12 o'clock and you want to put some money in here, so you get some assets on the system and you say, I want you to buy $20 every single day. And as long as it's in the green box, it's going to do that for you. And you are going to get a very good average price for your trades that is very close to what the market price is, right? What everyone else trades, known as the cost basis. As long as you're around that, then you are participating in the price appreciation of the asset. It should be going up as long as you've done your research and you're choosing the right assets. They're going up over the long term. You simply want to participate and dollar cost average to get a cost basis that is around the same as what the market has, and it is around the same as what the actual asset is trading. We can change this to weekly. So once a week on a Tuesday, I'm going to put in $100, and then you just simply press create here and it's going to do that for you. You can very simply go into the bots that you have. So if you click trade here, trading bots, you can see all of your bots that are running. You can cancel them out and everything like that. But if you're in the green zone and you just want to participate, you can set up a bot to recur and buy the assets that you want to buy over a specific time frame. Because very simply, we have buy zones when the prices are lower and sell zones when the prices are higher. And so you can automate your strategy like that. A quick tip here on dollar cost averaging and recurring buys as well. If you really aren't a trader and you're just looking to allocate to crypto because you think it's going to go higher, dollar cost averaging is the process of trying to get your cost basis, so the price that you buy at, not beating the market, but just with the market. So what we're doing here is allocating to assets that are outperforming. We don't need to beat the market. We don't need to be a trader and try and outperform the asset. It's actually investing in the asset that is the outperformance versus the fiat currency that you're using to trade for it. So an example here, this is the price of Bitcoin since inception. Okay, it's up, but with massive volatility in between, we can smooth this out by using a moving average. Go to indicators. This is on TradingView, but it works on OKX as well. Indicators, type in moving average. Choose a simple moving average here. Then go to settings. And you can choose the length and everything. So I'm going to choose a 50 period moving average. Press OK. Now what we have, if we take the chart away with all of the different volatility, this is a smoothed out chart of Bitcoin's price. If your portfolio looked like that, you'd be really happy, right? Because your portfolio is getting more and more expensive over time. It's going up and to the right. So dollar cost averaging is the process of creating a portfolio that does this. All of the volatility, all of the narratives and everything else that goes on, if we dollar cost average, we get this blue line and our portfolio is going to look like this. So that's what dollar cost averaging is. It's very important if you just want to get rid of all of the noise and just invest in the asset that outperforms. So dollar cost averaging over time gives us this line. If you are trading crypto as well, I highly recommend paying attention to on-chain metrics. This is a gift for us. No other asset class has this. And this will tell us where prices are relatively cheap or relatively expensive in relation to longer term trends. We want to take risk when prices are relatively cheap, when risk is cheap, and when risk is relatively expensive, we can look at selling, scaling back buys, stopping buys, or if we're really long term, just buying the same amount. I really recommend using on-chain metrics. Look into Bitcoin is free. What we can see here is the orange line telling us when Bitcoin prices are cheap in the green zone and when they're expensive in the red zone. Very simply, we can use this instead of the price chart to tell us when to take risk and when not to take risk. When this orange down here is in the green zone, this orange line, that's risk is cheap. When it's the red zone, risk is expensive. You can see as we're making this video, we're just climbing out. It's really important. If you want to know how to use this, what MVRV is, I've got some videos in the Crypto Investor course. I'll link it below. A whole on-chain section as well as trading sections and everything else. You can check the details below. Cycle master is also important. Again, when the price gets down underneath the purple zone, tends to be a good buy zone. And then when we get overbought into the red zone, tends to be an area where prices are a bit expensive. And so you can make your decisions if you're trading short-term or longer term, what you want to do. You also have long-term holder supply. What you can see is that this dips down during the very peak of bull markets. So if you're looking at this and you're new to Bitcoin or crypto, you don't really know if the prices are overextended or not, long-term holders pretty much know. And so you can see that long-term holders actually sell their crypto during the very peak of a bull market. And then as the price comes down, they buy again. They buy and accumulate. When the price gets massively overextended to the upside, long-term holders in blue let go of their coins and sell because it's the peak of a cycle. As the price comes down, they start buying again. Happened here as well. Peak of a cycle in price, long-term holders sell their coins, wait, and then accumulate again. So on-chain metrics can tell you exactly when long-term holders and other market participants are buying or selling. We need to be the right side of the cycle. We buy when prices are cheap, when most other people are selling, right? And then we sell to them when they're clamoring over each other to buy our coins at higher prices. So we can make much better trades and get better entries for our crypto using this. Again, like I said, Crypto Investor course goes through all of this and how to actually analyze it. So I'll link it below if you need it. Now I'll show you how to buy and sell crypto with a market order. A market order is like going to the airport. You're given a price. You don't choose that. You just give over your currency and get the other one. And that's it. So if you go to market order right here, you'll see that we cannot choose the price that we trade at. We can only choose an amount that we buy. So what I'm going to do is transfer some assets into this account. So we can press this tiny little blue button here. I've got some assets in my funding, so I'm going to move it to trading like this, press transfer. That's an internal transfer. It's free, so you don't have to pay for it. Now I've got some assets to trade. Market order, cannot choose the price. I can choose an amount of dollars that I pay. So I want to buy $20, right? And it's going to show you that. You can use a slider here. Or you can say, actually, I want an amount of BTC, 0.0001 BTC, whatever that is. You can trade that as well. However, with this, you don't really know if you can afford it because you don't know the exact price that you're getting. Although, it's going to be within a cent, so not really much problem. USDT, I'm going to buy $20 worth. Just click buy, and that will go through. You are going to trade this price right here, which is the cheapest offer or the cheapest ask. This one. We are buying the cheapest price, so we'll get that. On the sell side, it's exactly the same. Press sell, market order, choose an amount that you want to sell of BTC if you have it. Then just click sell and that goes through immediately. And you're going to get this price here, which is the best bid. So the best, but this guy's actually buying, right? He's using dollars to buy, so we'll sell them the Bitcoin. So that is very simply buying and selling, but it's not really the professional way to do things. I'll show you how to input limit orders then. Limit orders are us telling the market what we're willing to trade at. So we'll go to buy and then limit. Now I can choose the price that I pay. So this is like negotiating in a shop where some people are trading something and you're saying, I'll buy it, but I'm going to choose the price that I trade at. So what I'm going to do is place a limit order at 51,520. Now, you can see that my price that I'm willing to buy at is below the current market price. So I'm not going to trade right now. I cannot trade because people are trading at 51,644. My price is too cheap. However, I can put my price onto the system and say to people, if there are sellers that are coming in the market, pushing the price down, I am willing to buy at this price. And my order will be there in the system working as a limit order. So now I can put the amount of Bitcoin that I want to trade. So you can see I will trade $20 worth. And this is the price that I want to pay. So down here, I'm going to press buy BTC. And it just gives me the order confirmation. So this is the price that I'm willing to pay, the amount that I'm buying, and this is a limit order. If you want to turn this off, just click don't show, but I'm going to press confirm. And now what you can see down at the bottom is I have an open order. The order is open because it hasn't traded yet, because my price is too cheap. And so I have the details of my order, right? So you can see the price and the amount and when it was inputted, right? And so my order is too cheap, but you can see it on the price chart, and that will be working what's known as GTC, or good till cancelled. So that's going to be on the system forever unless you cancel it or unless someone trades your price, and then you actually get the Bitcoin. If you want to modify this, you can do, press modify, and you can change the limit price. So maybe you're not getting your trade and you want to put the price up a bit to something a little bit higher, press confirm. And now you've moved up a little bit and you've got more chance of getting your trade done because you're paying up. If you want to cancel this, just press cancel and that's gone. So that's the limit order on the buy side. We can also input limit orders on the sell side. So if we're looking to sell a price, if we've been buying in this green zone for months and months, and we know that we actually do want to sell some at a higher price, right? We don't have to wait and sell a market order there. We can put our limit order above the current price and sell that. So we go to the sell side, limit order, price, let's say 120,000, and then input the amount of Bitcoin that you want to sell. And then that will show you what the order size would be, and click sell. And that's it. Then your order would be up here. And if the price gets there, you will sell because you'll be in there waiting to sell. With limit orders, you can only put them in away from the current price. If you're buying, away from the current price is below. And if you're selling, away from the current price is above. If you put in a buy order, a limit order for 120K, and you want to buy some BTC, right? I can press buy now. What's going to happen is that I'm going to trade immediately because my limit order now is not actually a limit order, it's a market order. Because what I'm saying to the system is buy immediately as long as the price is at or below 120,000. So the system says to itself, well, the price is 51.7. I will buy immediately for you because you've told me buy immediately as long as the price is underneath my limit price. And so that turns into a market order. So limit orders only really work when they are away from the price. On the sell side, if I was to say sell Bitcoin at 30,000, it's going to sell immediately for me because the price is 51,000. To prevent any mistakes with your limit orders, you can actually turn on the advanced settings on OKX, which is advanced limit. So come to this drop down, click advanced limit right here. Now we can see we have a more granular control over the limit orders. Post only is a way to prevent mistakes. So post only means it will only post the order if it genuinely is a limit order in the system. So for example, if I'm a buyer and I accidentally make a mistake and put my limit order in at 60,000 instead of 50,000, this is now a market order because it's above the price. Post only is going to prevent this order from getting input into the system. It's going to say, wait a minute, your instructions have made your order a market order now. And so I'm going to actually prevent you from buying. So if I click buy, it's going to say, no, you can't do this because you're not entering a limit order. So this is insurance against mistakes. The other order types, fill or kill, means make sure that you fill my order in its entire size or kill it. So if I, at a current price, if I have an order of 1 Bitcoin and at the current price, it can fill half a Bitcoin at that price, it will not go out with any of the order because it cannot fill my order. So you either fill it or kill the entire order and let me come in again. The other one right here is immediate or cancel. Again, if you cannot immediately trade the order, cancel the whole thing and let me input the details again. When trading, we can also use stop loss orders. These are limit orders that actually let us take a loss. And the reason we have that is to prevent further losses. And so I would not recommend these if you're trading over longer time frames, if you're trading over a cycle, maybe 6, 18 months or more. These are going to really wreck you because you're going to get stopped out, but actually you didn't want to get stopped out. You need to stomach the volatility if you're trading over that. However, when you're getting more specific with trading, if you want to do that and be more active, then there are areas where you may go into a short-term trade. And if you're wrong about that trade, the price moves in that direction that you didn't think it would, then you may want to get out of that trade at a small loss to prevent further losses. An example of this would be if we want to buy here and we're at resistance and we think, well, maybe we're breaking out of resistance. We buy for a short-term trade, hoping to see the price go up a little bit. That doesn't happen and it actually moves down. Then what do we want to do? Well, we went into that trade short-term. We weren't really looking to invest over the next 6, 18 months. So we need to get out of the trade, right? And so what we would do is, we need a stop loss order here. So we bought higher, we sell here to prevent, the price coming down further. So again, I would not really recommend stop losses if you're trading over longer time frames or investing. I think they just get in the way. But here's how to implement them. A stop loss order right here, and we can have a trigger. Now, like I said with limit orders, you cannot put a sell order in as a limit below the actual price that the asset is trading at right now. Because if the price is 51 and you put a limit order in to sell at 43, you're going to sell right away. That's the instruction. We don't want to do that. What we want to tell the system is, if the price gets to 42, please sell it. Now that's different to a limit which says sell immediately as long as it's better than my limit. So we can't use a limit for a stop loss. What we need to use is a trigger order. So a trigger, like the word, uses a trigger price to then input an order. So what you can tell the system is, only if the price gets to 43K, then I want you to sell my crypto. That's different than a limit. Limit is sell immediately if the price is, at or better. A trigger is do not enter an order on the system. Don't do anything. Only enter the order if the trigger price is met. So as a stop loss, as an example, let's say we've bought at 51K and we want to take a loss at 43K. We need a trigger order. So the trigger price, 43,000. So you're telling the system, if the price gets to 43, then you can enter the order like I'm going to tell you. So at 43, enter a market order to sell 1 Bitcoin. This is now a trigger and what's known as a stop loss order. We're going to be selling at a loss in this trigger when this trigger hits. So that's how you would set a stop loss with a trigger. You can also, at this trigger price, tell the system to enter a limit order. So what you're doing now is saying, when the trigger price is met at 43, enter a limit order to sell at 100K. you're not going to sell anything because your limit order now is 100K. And of course, the price is 43K. So you're not actually going to sell anything, but you can see how you can put any order type in at the trigger. If my limit order was 30,000, then you would sell immediately, basically, because you're turning into a market order at that point. The trigger at 43 has entered a sell order at 30,000 limit. Price is at 43, you're going to sell immediately. So that is how to set limit orders or market orders at pretty much any price that you want via a trigger where the limit order is not going to let you do that. Another order type we can use is a trailing stop. This is usually used towards the sell side. So if you're looking to sell an asset, then you could do that. So sell, trailing stop, and you can see the variance here. What does this mean? So this is a sell order. What we're telling the system is, I want to sell, so you can put an amount of Bitcoin in here, and I want to be 5% away from the current price. So I've got Bitcoin and I'm going to sell. If the price drops 5% from here, that triggers and I sell my asset. Why would you want to sell 5% away from the current price? Why not just sell now? Well, it's because you maybe hope to gain more for the upwards price movements. This is how it works. So you're comfortable with selling. Maybe you're in the red zone, right? And you're like, this is my sell zone. And, I'm comfortable selling right here. I've made really good profits and I'm comfortable to sell. However, we're in a really big uptrend right now. And so if the price does move up, then I want to capture that as well. So what you do is set a trading stop with a percentage away from the current price. In this example, it's 5%. It's known as a callback rate or a variance. This is the current price, and our trailing stop is 5% away. So what we do is we trail this price by 5% upwards, but we don't move the trailing stop down. So the price goes up, and so does our trailing stop. It remains 5% away. We have a delta of 5% there. As the price moves down, our trailing stop doesn't. So our trailing stop doesn't move down with the price, it only moves up with the price. As the price moves up again, we remain 5% away. So our trailing stop has to move up again. Then you can see the price moves down 5% and we sell. So what we've done really is said to the system, I'm kind of happy to sell here, but if we're in a bull market, the price is moving up, I'll take that upside, no problem. If we get some upside, yeah, I'll take that. But we are 5% variance away. So you can enter that right here, trailing stop. I know that my variance is 5%. I want to sell 1 BTC and press sell. You can also press an activation price here. So you can say, don't activate this sell order until we reach 100,000, right? And then I want to basically sell, but with a variance of 5%. If we move up, great news. If we don't, hey, you know what? I've made good profits anyway. So that is a trailing stop. Now, again, Bitcoin, crypto, extremely volatile. And so, it's going to trade pretty quickly. A 5% move isn't really a big move in BTC. But if you want to trail your order, maybe hope to get some potential upside, you can use a trailing stop. If you need to know how to use more of the advanced trading bots on OKX, carry out some more advanced strategies, use the platform, I'll leave all of those helpful videos down below. The deposit bonus to OKX linked down there as well if you want to get that if you are new to the system. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.